This accounting mini lecture covers the classified balance sheet. Here we see an example of a classified balance sheet. A classified balance sheet just basically means that we are going to break our assets and liabilities up into sections. Okay? For assets, we're going to have 4 basic sections. We're going to have current assets. Current assets are those assets that we expect to either use up or turn into cash within 1 year or the operating cycle, whichever is longer. The next category is long-term investments. Long-term investments are those investments that we plan to hold for more than 1 year. The third category is plant assets. Sometimes you'll also see this one called fixed assets, property, plant, and equipment, or PPE, which is an abbreviation for property, plant, and equipment. This category is basically for our long-term assets that we use in the business to generate revenue. This is going to include things such as land, buildings, equipment, machinery, and things of that nature. Finally, the fourth category is intangible assets. Intangible assets will include items such as trademarks, copyrights, technology license, things of that nature. They're assets, but they lack physical substance. For our liabilities, we will divide our liabilities into 2 categories, current liabilities and long-term liabilities. Our current liabilities are those that we expect to satisfy within 1 year or the operating cycle, whichever is longer. Long-term liabilities are those that we expect to satisfy in more than 1 year. Now, you may be wondering why would we want to break the balance sheet up into these categories? These categories can actually be very helpful for financial statement users. When they are evaluating a company's liquidity, solvency, and things of that nature, it can be very helpful to know exactly what sort of composition we have within the assets and liabilities. It can be very important to know the relationship between, say, current assets and current liabilities, or current assets and total liabilities. It can be very helpful for an investor or creditor to have that information. So the basic reason for preparing a classified balance sheet is simply to provide more useful information to our financial statement users. Now, one additional thing that you're going to notice within the current asset section, we typically list our assets in order of liquidity. Cash is always listed first because cash is the most liquid asset, as it is already cash. The word liquid just basically refers to our ability to convert an asset to cash. Because cash is already cash, it is clearly the most liquid of the assets. Generally speaking, accounts receivable and or maybe short-term investments would kind of be the next category, because in most cases we can turn those into cash fairly quickly. Merchandise inventory sometimes takes a little bit longer to turn into cash, and sometimes we'll have other assets that we may or may not be able to readily convert to cash, and that's some of our less liquid assets that you see listed there. But normally when you see a balance sheet, within the current asset section at least, it will go in order of liquidity, with the most liquid being listed first. Thank you for watching this presentation on the classified balance sheet.